Hey guys, Mike here. So definitely an interesting day on Friday in the market. And of course, a lot of your questions are going to hinge around UNH. Obviously a big day. We're going to talk about that one. Intel's another one you guys were asking about, as well as rate cuts and IWM and all this other stuff, how it affects that. So we're going to get into all of that today. But I am going to start with something that, to me, I think these figures are staggering. And I want your input on if you're this age range, are you seeing this, or do you have kids this age range and you're seeing this as well? And that has to do with the unemployment numbers of young men. I mean, it is, when I saw these numbers Thursday, I was like, holy moly. They were so staggering, I just honestly don't believe them. Maybe they're true, and that's why I'm trying to figure out if they're true or not. But when you look at this right here, man, holy cow. The rise in gradual unemployment is concentrated among men between 22 to 27. Look at the disparity between men and women, though. The unemployment for women in that age range is going down, and men is just spiking. I mean, it's up to levels you haven't seen since the '08 financial crisis. I mean, look at that. That's when we know everybody got unemployed and took a minute to get back on track for them. But, I mean, that's nuts. I mean, again, take 2020 out, we shut down the world right there. But, you know, that is staggering. That it's gone from around, 4.5% to close to 7%, while women have gone down, which seems kind of strange, right? But when you look at like where we actually work, you know, men versus women and stuff, I think it makes a little more sense. And when we come over these categories, you can kind of see, right? Women's a dark line, the lighter line, whatever it goes, green, brown, that's men. Then, you know, you look sales and office, mostly women, service, food, cleaning, personal care, women, management, professional, women, and all of a sudden you get down to STEM and technical and transportation, material moving, construction, maintenance, and this is where men come in at. So obviously these categories right here, I'm especially betting probably on the technical side is where you're seeing it a lot of, and the STEM and things like that. But again, look at this right here. For the first time like ever, you're having young male college grads are now jobless at the same rate as non-grads, which just rubs salt in the wound, right? They took on all this debt, and yet here they are at the same level of unemployment supposedly. And again, you got the lighter line is your non-grads, darker lines, college grads, and you don't even see the non-college grads unemployment going up. It's just trailing sideways. And you look at women, total opposite. Non-college grad unemployment is going up. Graduated women's unemployment is going down. And so let me know down the bottom so let me know in the comments if that is true, if you are seeing that, experiencing that. I can only imagine with these announcements coming out from these companies about programmers and things like that, it's only going to get worse. When I got pretty sure I think programming and things like that are more male dominated. But again, let me know if you're seeing that. And that's not a good sign for sure. But it also makes sense because when you hear like men, usually like 20 to 28, somewhere in that range. And I've seen a lot of these guys, man, on YouTube, in person, whatever. And when they talk about the United States, they talk about like it's the third world country, like it's the worst, you know, thing in the world, basically. Like, and I'm like looking at them like, what country are you describing? And I can't use the words they use, obviously, because it's pretty vulgar language to describe the country. But I'm just like, wow, you know. But now I kind of see where that stat makes me see where the anger comes from, and I don't blame them for being upset. Obviously, especially if they took on a lot of debt in college, and you know now can't get a job out there. That really sucks. But you know, I just kind of wonder if that's true or not. And it's not a good sign. That is for sure. So just let me know, will you? Now, first question here says, could you cover Intel? Has it hit bottom? No news to recovery, and that's not true. There's plenty of news about the recovery. How can it go up and losing market share everywhere? Somebody said at the bottom. It has nothing to do with it, right? This big pump right here, this is all President Trump. Okay, remember, fundamentals one thing. Now you look at what's going on with President Trump's tweets and what he wants to do. And so now he's saying, according to recent reports, the Trump administration is considering using funds from the CHIP Act to acquire an equity stake in Intel. The initiative aims at bolstering the domestic semiconductor industry and expedite chip production within the United States. And of course, this ain't the first time we've taken a stake in a publicly traded company. The difference was it was a crisis last time when we started taking stakes in like Citigroup, GM, Fannie Mae, Freddie Mae, this kind of stuff. And so it's nothing new. We bailed out, obviously, the big three. And getting to the chart real quick, and now getting into that again, you can see the levels clearly, right? I mean, this is a pump. 26.44 is your next level. If it keeps going above that, I'd say 35. 35 would be another nice one, way up there. Down below, you can clearly see my white lines where they're at and stuff. But I mean, just look at this garbage company. I mean, just look at this. You know, it ain't my favorite company because it's just taking billions of dollars of our taxpayer dollars while they just laid off thousands of American workers. But when you look at this thing, I mean, it's just a mess. I mean, you look at where Taiwan Semiconductors, AMD, NVIDIA, Avgo, where all those stocks are up, you know, hundreds of percent, and this thing is still down like, even with that pump, what is it up, down like 20% or something? During all of that, which is just a hot freaking mess. And what you got to understand about this one is that this pump all hinges on if we're going to take a stake in the company. And let me know in the bottom, like, are you for the federal government getting involved in publicly traded companies and us taking equity stakes and having a portfolio at the government level? You know, and again, I didn't agree with it in 08. I understood it was a crisis. You can kind of make, you know, the deal with that. This one, absolutely not. This one, absolutely not. Because remember, I don't believe in the federal government being involved in owning shares of any company because remember, administrations are going to change throughout the years. And so what's going to stop the next administration from going, well, you know what? Let's say a Democrat gets in. We'll just start buying solar stocks and wind companies and we'll short oil. You know, you can say that never happened, but guess what? If this happens, that kind of opens the door to make it a regular thing. Who's managing the portfolio? And then the bias, because what happens is now contracts and funds that would have gone to really well-ran companies like a Taiwan Semiconductors or maybe some other chip companies will no longer go to those companies because now if we have a stake in this, you want to keep your stock rising, right? So there's a bias. So it's going to funnel into Intel, and that's why you see this pump. And so again, not a pump based on fundamentals, nothing else. Still a horribly ran company, still laying off employees and all that fun stuff, eating up our tax dollars. Again, congratulations. Always happy. Got some members who've just been owning this stock and buying it, and that's great. So, you know, keep it going. Hope it goes up 100% for you. But as far as me, I wouldn't back any federal government. I mean, as much corruption as we already have, and as much as people complain about Pelosi and all these others up there that trade on a daily basis, that trade on inside information, now instead of waiting for Buffett on his 13F to come out to see what he's bought, now we're going to be sitting on pins and needles going, what'd the government buy this time? There's a rumor. You know, and it's like, I don't want that. I don't want my tax dollars buying stakes in companies because I know how that's going to work. It's going to be corruption. That's what's going to happen, right? And contracts and funds that should be going to better companies are not going to go because they're going to be biased towards that company because we own a stake in them. Like that's not how it works. I mean, I'm sorry, that's not how it works. That's like your parent buying a stake in, you know, some shares in your company and then sending funds to your mortal enemy or your biggest competitor. Is that going to happen? No, they're going to funnel it to you. Right? Because you're their kid and they own shares in your company. You know, so that's the reason for the pump. That's the news. It ain't like they all of a sudden, you know, all of a sudden executives resign and we got better executives running stuff. But, you know, I mean, still my plan for Intel was simply pull all the funds from them that will force them to sell to a company like Taiwan Semiconductors or anybody. I don't care who it is at this point in time. Just get somebody who knows what the hell they're doing. Okay, that's what we need. And I'm all about, you know, making sure we manufacture chips here and do all that fun stuff. All on board with that. I'm just not on board with the federal government taking shares of companies. That's not what I'm on board with. It makes no sense to me. I don't understand how anybody who believes that the federal government is already too big to begin with could back that plan. It blows my mind. Now, if it comes out that they don't do it, well, guess what? What happened to the pump? It's going to drop. That's just what it is. Let me know what you think about that. Now, next one says, hey, Mike, what did you think about the news for UNH? Where do you think it goes from here? Thanks for covering the stock. Yeah, big pump on UNH right here. Obviously, Buffett bought it. A couple other funds bought it. Really, it was the Buffett news. And you always get the Buffett pump, right? And so it did open above that anchor VWAP, the all-important anchor VWAPs here. And so that was a big thing. I mean, big gap up. So remember this anchor VWAP? That was on the third drop. And these act as support, right? And when you break them, it's usually never a good thing. And then this one right here, once we got above it, and all these rumors started down in here, okay? That's why we started pumping and pumping and pumping, and then it ended up being true, right? It was a rumor, not confirmed, and it ended up being true. Let me know if you bought calls, like how much you made on your calls. I know they went up just unbelievably, okay? Now, when you look at this, when we looked at this chart for weeks upon weeks, and I pull up this visible range volume profile, and by the way, look at the moving averages. Very important. For the first time in a while, we are above the 50 moving average. But look at how far below the 200 we are, 42%. Matter of fact, while I'm thinking about where is the 200 weekly at, because I know that's even higher. And these usually act as magnets, right? It's like a rubber band. You get so far stretched down Okay. And we're going to talk about the good and the bad in just a second, but 62% still down from that moving average. But when you pull up the visible range volume profile, as I've done for weeks, this is what gives you like the breathtaking moment to go, holy moly, this is something you'll rarely get to see on any stock. Unless there's a crash in the market, like a really bad crash, that's when you get to see it. But not just like when the market's going all-time new highs, but this thing has had everything hit it. Look at these volume gaps. Holy moly. And you can clearly see, if we can get above, I think it's 211, 311.75, like close above that right there comfortably. Well, I mean, I'm telling you, there's not much resistance. It literally can move. Now, it's not a tech stock, okay? But if the options market gets behind this thing, then you could absolutely see it go. They were able to push this thing down, and they can pump this thing up, and you can see the levels, right? And what's crazy is when you pull up the moving average, let me pull up real quick to see where the 200 for the dollar amount is on this thing. And you can see it's like, holy cow, look how far up it is. It's up in the second volume gap, 443.75 now. Again, that'll move. It's a moving average, so it's going to move. But wow, yeah, that's up there. Okay, so every pump, Warren Buffett pump, eventually is going to stall. We're going to come down, start to consolidate. One thing is, very important about this, you got this gigantic gap below. This is a 33% move up for an insurance company. Okay, this ain't NVIDIA, AMD, Oklo, or none of these like low float, high stocks, whatever. And it's at a critical level here coming up. So we'll see if it can close above that. One thing to keep in mind, though, if you're holding on this thing or you're new to this one, this is an insurance company. Insurance companies love to stay in a range for years. Okay, this thing will stay in a range for 2 to 3 years sometimes longer than that. All right, pays a divvy. It's considered more of a value type investment, that kind of stuff. And so and then of course they'll go on a run. You get on this run right here, but again, it'll stay there for a while. Like that was like a year and a half. This one right here was like 2.5 years. It stayed in this range right here, and then you got to the top. And we basically stay, I mean, it was a nice big range, but you're talking between like 485 to like almost $600 for almost 4 years, just bouncing back and forth. Okay. So just keep that in mind. Again, there will come a point in time when we get out of the euphoric part and people are starting to chase, because they are starting to chase. I know for a fact they're chasing. And let's not forget with this one, what you're waiting on is the other shoe to drop is all the charges, right? I mean, they're facing not only civil, criminal charges possibly. And so it's rare you find a company where one CEO is assassinated, the other one steps down right before the announcement of the Medicare fraud allegations and stuff, and the investigation that is being launched and all that fun stuff. So they still got to wait that out. So again, if they're found guilty, which I'll be shocked if they're not, honestly, because some of these companies do it. Then you're talking about possibly billions in fines. Who knows what the criminal charges may be? Who knows what the other penalties are? They still don't have guidance yet. They still have stuff. It's just that's what I kept talking about as it was going down. I was like, the rewards to the upside, if it's just going, and we know how the market likes to work, pretty big, right? It can be pretty freaking big. And so we'll have to find out. And obviously with Warren Buffett getting behind it, it's not a huge investment for Berkshire Hathaway, but that just kind of lends like where they say, hey, this is worth the value. It's worth the risk, right? And so it's more of a value play. They pay a pretty nice quarterly dividend. So, all that fun stuff. But we got to wait for that to drop. And so we'll see what happens with that one. But congrats to everybody in it. Now, next question here says, I recall early in the year you overlapped 2025 chart and 2018 chart. I'm curious if there is still a correlation. I won't say so much correlation with this one as more like in 1998, 1999. What I'm talking about is this is 2018, the beginning and stuff. You can kind of see where we had the drop. And then you can see the rest of 2018 where you had the big drop at the end. So really, if you move this back, this looks almost identical, right? So they had the drop in 2018 from here, okay? And remember, we already had tariffs put in place at the beginning of that year and stuff. And then at the end, boom, here we go down. And they were raising rates at this point in time, all that fun stuff. So that's kind of that. But the truth is, it really is what's going on, And again, what we'll do is have fun here. I know this don't really mean much. We'll pull up 2019 and look at that, because you look at 2019 and we copy that one and move it over, then you can see coming out of that big drop what kind of move you had, and it was a big one, right? But you can kind of see how it went on and everything, when the pullbacks were and all that fun stuff for this one. And so is there a correlation to this one? Probably not, just because they were raising rates. Again, we did have the tariff, nowhere near like the kind of stuff it is now. But the one that correlates the most is clearly 1998 to 1999, because in 1998 you had a big drop, 22%, and what do we do? Going down in April, we dropped around 21.5%. And so if you look at what the recovery was coming out of that, and then going into 99, as we try to copy these right here, you can see it's pretty much almost identical. As we draw this up here and copy it and then move it over to the current way. A lot of people are really surprised at the correlation of this, but it is extremely correlated. And so that's what it looks like now. See that right there? I mean, that looks almost identical to the 98 recovery, and then that's what happened after. Is that what we're going to get? We'll find out. And the reason why people look at that one, because that was the dot-com bubble, the introduction of the internet, all these different stocks, this tech we had never seen before. Same thing you're seeing with like AI and the chip companies and all this good stuff, right? So that's what we're looking at. So yeah, this one has a much more direct correlation, even though it was different months where it was recovering. And so, we'll see, but you didn't even see there. You had plenty of drawdowns, right? I mean, 3 to 5% drawdowns all the way up. It was choppy. The difference is between now and then is a lot of those companies literally had zero revenue, okay? Zero to speak of. They just threw .com on their name and they went up $1 billion. So anyway, I hope that helps on that one. Next from Kurt says, so if they're front-running small caps hard right now, how much does that increase the possibility of sell the news when the cut happens? It actually increases the odds a whole lot if that continues. Remember, we don't possibly get a cut until the month of September, right? And I just made this video for members saying the Fed will cut even if we're at all-time highs. And here's what happens after the cut. And so I went over IWM with them, and IWM is a strange one, okay? Remember, they ran this thing up. Here's where the cut happened. You see the big run up going into September 18th, 2024, and end up, this is the day, right? This is an hourly chart, ballooned up 2.25% going into the cut, completely lost it, okay? Gave back everything, and then basically sold down for the next like 2 weeks, that is? Yeah, 2 weeks. And so, yes, they front run. So yeah, the more they front run, the more likely it is to be a sell the news event for sure. And again, there's other cuts over here. You can clearly see as we moved back up, there was another one in November right here, if I'm not mistaken. And then we end up selling off after that. And then there was another one in December, and we end up selling off from that one as well. So yeah, it's definitely a much bigger possibility if they run us up into it. So hope that helps. Now, next one says, hey, Mike, love the channel. Curious your thoughts on what will happen to growth/AI stock sector when they reduce interest rates. Will it take the wind out of their sail? Is Wall Street repositioning in other sectors in anticipation, or will the market continue to do an even bigger bull run across the board? Well, when you look at, we'll just look at like rotation, for example, you're seeing right now, just because of the months we're in, this is 1 month, and you can see home builders, IBB, which is biotech, discretionary, there's big tech, airlines, and so they're doing pretty darn well. And I don't even have small caps on here. I should have small caps on here, but if you look at the last 5 days, that's definitely outperformed quite handily. But again, you also look at the last 5 days, you got airlines, biotech, transportation, home builders, XLV, of course, which is healthcare. That's more of just a defensive play, and that's with United Healthcare running up. I think Eli Lilly's running up, that kind of fun stuff. And you can see XOK kind of being pushed down to the bottom. It doesn't mean, as you saw with IWM, it doesn't mean they're going to cut the race. The market's going to go freaking crazy, right? Because remember, they're cutting in September. And so where's the market going to be in September? That's really the bigger question, right? To set up the year end, if we get the rally at year end, and all that fun stuff. And so, no, I mean, cutting the race, if they're cutting the race to save the economy and the market thinks that, the market's not going to like it, right? But if they're just cutting like they did in September, they cut 3 in a row, right? They end up cutting the September meeting, they cut the November meeting, they cut December meeting. There was no October meeting. And so I think we're kind of setting up the same way here. So, and it could be 25 basis point cuts, right? Just try to get what they call the neutral rate and things like that. And so it's good for liquidity purposes. There's no ifs, ands, or buts about that. It does not mean it's a trigger for the market that day to go, I'm going crazy for the next week. It doesn't mean that at all. I just showed that to you. I showed it to members where it's like the S&P sold off some, 5% sometimes, or it did rally. So it's really, when it comes to S&P, it's like just throwing dice on the floor to see what's going to happen for the next couple of days when that happens. So, and again, the more you run up into it, usually the more sell the news event it is. And I tell everybody, you want a pullback in September, August to load up at lower rates, right? I mean, or load up at lower prices. I don't know why people want to buy stocks at all-time highs. If you get a normal, 3 to 5% pullback, I'd rather buy the stocks, or say, I'd rather buy Robinhood at 80, 90 versus 113. You know what I'm saying? So we'll see what happens. But yeah, that's what I think right there. Let me know in the comments what you guys think. Now, last one it says from Marcus, what are the best charts / metric resource / data that are available to study the strength of lower middle class and regular middle class, higher income, I guess? I'm sure it's a combination of a lot, of course. I have a theory that if inflation starts ticking back up slowly and steadily, then that might actually be a sign that the lower middle and upper middle class are doing well. If prices are going up, that means people are buying, meaning people are doing well. Not a huge or sudden spike in inflation, just slow and steady over 1 to 3 years. I think the new standard is going to be 3% inflation, depending on how AI affects the global markets. Yeah, I think people forget, like, prices go up all the time. The average is 2%. I mean, that's been for years and years and years. So they steadily just go up. Remember, people aren't mad at the inflation right now. They're really upset at the prices, right, that we got from all the 2020 stuff. And so prices are just so much higher than they were before. That's building off that inflation. And in certain areas, like I showed you yesterday, yes, certain prices like beef and vegetables and things like that are going, pretty high up, right? And so that is happening. And again, we don't know, again, these tariffs just keep filtering through what the company's going to do with the prices. We don't know yet. Okay, we're going to have to figure it out. I've told you before this whole thing happened, when people are like, inflation is going to spike. And I said, I've read like study after study after study. There's no historical data to show that. Okay, and so far we haven't seen it. And it shouldn't be a steady up, right? It should be one time, because tariffs are a one-off thing where it's 10% for this, 15% of that. That's what should happen. They don't go up every month and stuff. So again, we'll see. I mean, the other thing people got to watch out for, which I'm going to be watching out for, is, if the rate cuts do happen, that means you're going to see the mortgage rates drop. And the biggest contributor to inflation is the home, right? Rents, mortgages, things like that, right? So what's been stagnant? Home sales, things like that nature. People are cutting prices, trying to get rid of their house right now. But if all of a sudden mortgage rates drop and demand starts to go up because rents are so high, people really want to get in a house. Like in my area, a 2-bedroom apartment, the rent's more than what a 3-bedroom, 2.5 bath house would cost you for a mortgage. Okay, and so that's not a good thing. And so they really want to get into a house. So if that happens, all of a sudden you might start seeing these bidding wars take place again. And if you start seeing those numbers go up, yeah, that means inflation is going up. But I mean, we're doing good. The people that selling the houses or whatever. So we'll see how it goes. It's going to be a tricky, or I should say tricky, an interesting rest of the year for sure, to say the least. So let me know what you guys think on that. So anyway, hope you guys got some out of it. Please hit that like, subscribe button on your way out. Thank you for signing up for the membership and listen to McDonald's combo at $7.99. Just hit the first link in the bottom of the description. And I'll see you guys on Sunday to set up the week.